What is up, my people? Happy Saturday. I'm excited to be here with you guys. Much more upbeat tone. Well, at least to start with, compared to last week after our experience. I know that some of you jumped on. A lot of you reached out to me after last week's live, and just you guys were so reassuring. So I just want to say thank you. Thanks for reaching out. I got hundreds of text messages, emails, and DMs last week after the hurricane. So I just want to say thank you. I wanted to start there. And secondly, let you know that today I'm really excited to have a guest on live with us here. This has been a week of, kind of addressing the issues that we've seen, not only from Ian, but what's going on in our local market here. And I'm excited to share this topic. I know people may not think that this is the most exciting thing in the world, but at the end of the day, being educated is very empowering, right? Especially when it comes to home ownership or, your auto. That we're going to get in a lot of that stuff today. And you guys have seen the title, right? Florida's insurance crisis. And this is not a joke anymore, right? It's went from funny, ha ha, to funny, oh crap, really quick, right? And I wanted to bring somebody on here today who could specifically talk to this stuff. So I'm very excited. And hey, if this is your first time to the channel, my name is Juan Alcala. I'm a licensed real estate professional here in the Tampa Bay area, and I help people just like you buy, sell, relocate, and invest in the Tampa Bay area. However, you got to get hold of us, whether that's phone call, email, text message. All of my information is listed down below, including my calendar, y'all. If you wanted to schedule a time to talk with me directly, you don't even have to ask for my time. I'll leave that open. It's available to my audience and my clients. Please feel free to use it. Also, I would love to know where you're watching from today. And when you have questions, please feel free to ask those in the chat. I'm going to have our special guests address those on the fly while we're chopping it up today, and you've got access to her. So I'm very excited to do this because, a lot of the times, I bring a topic to you guys, you're very interactive, you ask a lot of questions, and that's wonderful. But I wanted to bring somebody else here who specializes specifically insurance. So without further ado, I want to bring our special guest on today. I made a connection from a referral from another agent in Orlando, ironically. And she has been absolutely excellent. She helped serve one of our clients. And the way that she did this was by, I called her, and within probably 2 minutes, she had me completely disarmed. And not only that, I was empowered. She had me understanding what the situation was and gave me all the confidence in the world that she could help my client navigate through some challenges that they were being faced with on insurance quotes. And within 15 minutes, I got a phone call back from my client saying, we're good. This person is awesome, right? So if that's how your relationship starts off, that's a great way to go. So without any further ado, I want to bring in our very special guest today, Miss Ashley Burbank-Boyles. What's going on, Ashley? How are you?
Hey, how are you? That was a great introduction. Thank you.
Oh, you're welcome. Well, you did it. So it's my pleasure to do that. And I know, like I said, our topic may not be the most juicy thing in the world, but let's be honest. If you're a homeowner, Florida is one thing, but people are starting to face this nationally. It's not just Florida, right? Because we all know these companies are most of them are national, and they don't just absorb losses in one place and pretend like it's gonna be okay everywhere else, right? They pass that along to a consumer somewhere else. So, I'm sure we can get knee deep into this stuff. And Ashley and I were talking right before we went live today, and Florida is facing these challenges. If you haven't seen the headlines, they're everywhere. Florida's insurance crisis, how bad is it going to get? What, people are being dropped. And, it's one thing when you hear that, you're like, okay, great. Well, guess who got the notification 4 weeks ago that their insurer was going to pull out of the state, and we weren't going to have insurance at the end of the month? This guy right here, right? Done nothing, had no claims, minding my own business in my life, right? Started making phone calls, triple the prices, all of these things. It's just been insane. So I want to dig into some of this stuff today and just, hey, again, if you guys have questions, please feel free to drop them below. If you're considering purchasing in Tampa or investing in the area and you've got questions specifically, I'm going to get you all of Ashley's contact information. I assure you that will be a wonderful conversation. You will feel very good about it when you're done. So I wanted to start with that. But Ashley, let's talk about this, right? So I got some headlines that I want to kind of throw your way. And then I want you to, to help us laypersons just kind of understand how to navigate these waters, right? So skyrocketing premiums, right? Florida's market is in full meltdown. These are the headlines that are coming across. UPC, which is United Property and Casualty, they dropped us. I just shared that with you guys. We'll talk about Citizens. We'll get to that today. But from what I can find, at least 14 companies in the last 12 months have stopped writing new policies in the state of Florida, and 11 others have become insolvent. Right. So when you read these headlines, you're like, holy cow, right? Holy cow. And, the whys, I think, being in the industry for us on the sales side and as a homeowner, like I can see the reasons, right? Like inflation's going through the roof, home values have skyrocketed, the cost of goods, the cost of labor. I see all that. Materials, all those things have gone up. So of course my insurance is going to go up, just like my taxes. This is what's been happening out there. But what I wasn't fully aware of is all of this fraud that was happening in the background too. And this is not something new. This has been going on for way too long. Right. And then, you got the insurance companies blaming the government, saying that's, because they're forcing them to run artificially low premiums, right? That they're being hurt on the back end, which we all know is true anytime government interference happens, right? But they talk about the fraud. And then the last thing that I wasn't aware of, and this is the last thing I'm going to mention on this, and I'm going to get out of the way and let Ashley talk here, is the fact that 79% of all of the national's litigation that is regarding property insurance happens in the state of Florida. I heard that and I was like, what? Because I knew that California is the most litigious state in the country, right? I just assume everybody sues for everything in California. I had no idea that 79% of those cases happened in Florida. But here's the thing that was staggering to me. Only 9% are from claims. So there's all this other litigation going on over there, which is just crazy. Now, I just threw a ton at y'all, right? And what I want to do is preface this and say this is not gloom or doom. We have to buy homes. If we have a mortgage, we have to have insurance. This is the trade-off, y'all, right? It's the cost of living in paradise. So, Ashley, I just threw out all the headlines, and if it bleeds, it leads, right? That's what everybody starts with. But how can we navigate this crazy insurance market right now? What is the best practices? Help us, everyday folk try to understand how to get our arms around this, right? Is it going to be unaffordable for us in the next 2 to 3 years? Or, are we going to be able to work through this? Help us help ourselves.
So you are right. 79% of all the homeowners claims in the entire country that are litigated come from Florida. Florida is only responsible for 8-9% of all the claims in the entire country, but 79% of them are litigated, and those all come from Florida. So Florida is one of the most litigious states, and you can see that people who are moving to Florida, when you're driving down any road, you're going to see advertisements for attorneys on billboards and signs and stop signs and stoplights, and it's so there's very, very generous attorney fees in the state of Florida. So I think that's where a lot of this is stemming from. I will tell you that we just had this hurricane, and it's a catastrophic event for insurance carriers, but we have been in a man-made insurance crisis for years. So these insurance companies that are private market insurance companies that are supposed to be competitive, bring down premiums, compete with each other, they work obviously off of the law of large numbers. So they want us to write new business with them so that they can drop their premiums and make it competitive. But unfortunately, there's been so many frivolous lawsuits over the roof claims, water losses in the home where people are trying to, get their floors redone and their baseboards and new cabinets and everything else. So they're just trying to remodel their entire house over, a simple plumbing leak. And then roofing claims is a big one too. People don't pay to replace their roofs anymore. It's not really maintenance. They're not saving money for it. And insurance or roofing companies, 10 years ago, they used to knock on doors and offer financing for you to, replace your roof. And now they knock on your door and they say, hey, you've got some granule loss and we're going to call it wind damage or hail, which, we don't get a lot of that in Florida.
Yep.
And then they file an insurance claim. And that roofing company is typically, in cahoots with a public adjuster who is also in cahoots with an attorney. And so your $10,000, $15,000, $20,000 roof replacement that you're getting is now a $50,000, $60,000, $70,000 payout from the insurance company, and you didn't see a dime of that other than getting your new roof. Everything's going to the roofing company, the public adjuster, and the attorney.
Yeah. So and real quick, Ashley, on this note, guys, we're not saying that every public adjuster, every attorney, right? She's just giving you how the scheme works here, right? So for the people who are less than let's just say their character is lacking, right? This is the path. This is how this occurs. So sorry to interrupt you. I just want to it's not everyone.
Yeah, it's not everybody. You're right. In the wake of the storm, there's a lot of door-to-door knockers right now, taking advantage of people, trying to get them to sign assignment of benefits over to them, which means that they get to file a claim on behalf of the homeowner to the insurance company. And I'll tell you, there's no need for that. We go into a contract with our insurance, we pay them a premium, and we expect them to act in the event that we have a loss. So your first phone call should always be to your insurance agent, and it should also, or to your insurance carrier. Let them know that you suffered a loss, allow them to make it right and bring you back to pre-loss condition and cut you a check. We're just seeing that's, public adjusters, roofing companies, and attorneys are getting to that first.
So I want to hit on that point specifically so people can be, again, empowered here. It's called an assignment of benefits. That's what they're trying to get you to sign off on?
Correct. Okay. It's called an assignment of benefits. It gives the roofing company the ability to act on your behalf. So when the roofing company comes to your home and they say, you have wind damage, we're going to file a claim on your behalf. Don't worry about it. We'll take care of everything for you. The problem with that is that roofing company can now go into a lawsuit with your insurance company, and you don't even know that you are suing your insurance company. You have no idea. And we get those phone calls all the time. And it's unfortunate because the minute you are in a first party lawsuit with an insurance carrier, you're probably going to be dropped. And then the next time you need to get insurance, there's going to be a surcharge for that, and you're going to probably be ineligible for a new policy. Specifically because you sued your insurance company, and a lot of people don't even know that they're doing that.
Yeah. So you become the black sheep of the insurees, right? So
yeah,
I can understand that. And this is something that, I'm really glad that you went this direction with this. My father-in-law is in commercial roofing and has been in that industry for 25, 30 years. And prior to that was in residential. And, and he was explaining this to us when we first moved down. He goes, these guys walk around and they get people who just don't know and understand to sign off on this. And it sounds great. Like, oh, I'm going to get a new roof, right?
Mm-hmm.
When maybe you just replaced your roof 4 years ago and you absolutely don't need it. It lost 2 shingles or something. And again, I'm not going to speak out of my area of expertise. I'm not a roofer, right? But there are times when things can be repaired, right? Think of us, when we have damage, they don't replace our body. They work on fixing the problem and they go from there. And
mm-hmm.
Our health insurance is already astronomical. Could you imagine if we were getting full replacements on limbs every time something happened? That's my mind where, of course, things are going to skyrocket,
Yeah.
So, really taking an objective look as a homeowner, thinking from the position of, yes, you have an insurer there. They are there for the worst case scenario. That's the thing I always want to remind myself of and my clients. That is worst case scenario, meaning okay, I look up, obviously, sections of my roof are gone, all kinds of, it's pretty obvious that's not going to be able to be repaired. But if I'm missing 3 shingles and somebody shows up my door and says, hey, you need a brand new roof, I'm going to start questioning that. And if I was in control of that cash, I assure you, I would start questioning it. But, somebody with a big smile says, hey, I can get this done for you. And we automatically think that that's okay. But guys, it's not. It's going to get passed back along to you in one form or another. And that's happening with, again, premiums and companies failing. So sorry to interrupt there, Ashley. I just want to make sure that we really drill down. Think as if you had to write the check, right? That's a great position to start with, right?
Yeah.
I'm going to be a lot more a lot more scrutinizing of the people doing the work on my house.
Mm-hmm.
Right? Walk me through why I should do that. Why does this make sense? Okay, that makes sense. Now let's talk to these people. So thank you for that. Keep going.
Yeah. So, the insurance carriers, we have, as an insurance agent, we have 3 options to write insurance policies in the state of Florida. Our first option is always going to be the private market. The private market is, those bigger companies that, your American Integrities, American Traditions, and Universal Property and Casualty, and UPC, all of those bigger ones. And I know I'm missing a lot of them right now, but Cypress for one. But those are all of our private market insurance carriers. So they want us to write new business with them. They try to be competitive in their premiums. However, when they experience big losses, they have to raise their premiums. The private admitted market has to submit to the state of Florida their financials. They have to be financially stable in order to be an insurance carrier in the state of Florida. So that being said, a lot of them are not doing very well. And the ones that cannot afford to pay the claims that for the policyholders that they have on their books, they're forced into liquidation. They're forced into receivership. They're forced insolvency. So when that happens, all of those all of those policyholders now have to either go to Citizens, or we got to find them a new private market insurance carrier. But when we lose 6 insurance carriers in the state of Florida just since January, there's 100,000 plus policyholders that now are trying to find new insurance, and these other insurance carriers don't want to pick them up because it's more risk for them. So we have to go through Citizens. Citizens being the state insurance it's the option it's our last insurer option. So they're the state insurance. They're not going to offer extra endorsements and additional coverages and things like that. They're here because we need to be able to control costs. We have to be able to provide insurance for the people that cannot get insurance otherwise. The other option is our excess and surplus market. They are not admitted through the state of Florida. So they can really insure anything that they want to insure. Those are our Lloyd's and Lloyd's of London and those types of insurance carriers. And we a lot of times we have to use those because even Citizens has been tightening up their underwriting guidelines to the point where if you want to buy a house, we have to go to the excess and surplus market. That also means they're allowed to charge whatever they want to charge. If you want to buy that house, you're going to have to just pay that insurance premium. They're not controlled by the state, where they don't have to apply through the state to get rate increases. They can cancel you for any reason. The private market is because they are financially backed by the state of Florida through the Florida Insurance Guarantee Association. If they are not financially stable, the state of Florida can force them into liquidation. If they have an influx of claims and they can't pay their claims and all that, so they end up going into receivership, all of us are now paying for it because the Florida Insurance Guarantee Association has to surcharge every policyholder in the state of Florida. If we go through Citizens, which is the state insurance, the Citizens state insurance, if they can't pay all of their claims, they're expecting just from this hurricane over 200,000 claims. They don't have the funds to pay all those claims. So that means that every policyholder admitted through the state and also through Citizens can see a 60% surcharge. They can see a catastrophic surcharge on their policy. So we're saving them money now by writing them with the Citizens insurance, but they're going to see a surcharge, a significant one.
Yep. You brought that up, and what spurred all of this for me is obviously I got the cancellation notice, number one, right? That was the first thing that I got. But the other thing that I got, I want to share it with you guys here in a second. Give me 1 second here. I'm going to pull this up because I was bumping along my Facebook feed, and sure enough, I see a post from Miss Ashley herself. And what does it say? So check this out. Hey, mortgage brokers and real estate agents, you know those citizen policies that we write for your closings? They just got significantly more expensive.
Yes.
You write like a copywriter, by the way. That is a CAT surcharge, and I'm going to ask you what that means in a second. A surcharge to cover citizens' losses from Hurricane Ian. All Florida. That's the word I saw. All Florida policyholders can expect a FIGA surcharge on their
Mhm.
policy too. Sit tight. We're just getting started. That makes me uncomfortable.
I
I
know.
love,
I'm sorry.
I love my job. I love my job. I love my job. Crying out loud, right? So like, I had to bring this up because I'm just like, I'm looking at this and there's an $800 surcharge on this policy already, right?
Mhm.
$800, y'all. So
Yeah.
and talk about a sunshine tax, right?
Yeah.
So, people made fun of California for years because they had the quote unquote sunshine tax, right? And we don't have, personal income tax here, which is an absolute blessing. As someone who moved from another state, they came here, it's still been to the positive for me. But my insurance between my auto and my homeowners is really starting to tighten that gap. Really
Mhm.
starting to tighten that gap. And y'all know I tell the truth on this channel, right? Like I'm not trying to hide and say that everything is sunshine, lollipops, and rainbows in Tampa because it's just not, y'all. Like we have challenges too. That the price of paradise comes at a cost. So
I
I
like
just
to refer to it as WTF, welcome to Florida.
well
Yeah.
yeah. So I just Ashley, talk to us about what is a CAT surcharge and what is FIGA? So just so we know.
So the Florida Insurance Guarantee Association is what financially backs all of our private market insurance carriers as well as Citizens, the state insurance. So they're going to step in and pay the claims when an insurance company cannot financially pay those claims. So when an insurance company goes insolvent or into liquidation, however you want to refer to it, they're forced to either drop policies to maintain their financial status, or they are forced to liquidate entirely. In cases like that, if those homeowners, those policyholders have insurance claims, that the insurance company can no longer pay those claims. They don't have the financial means to do that. So Florida Insurance Guarantee Association, FICA, they step in to pay those claims.
Guarantee.
Right,
Understood.
yeah, correct. So, and they financially back all the private market insurance carriers. So that's why you will see that surcharge in the event that we have a cat storm like we just did. You will see that surcharge on your policy.
So meaning
Uh,
category storm.
yeah,
Okay.
catastrophic. Yep,
Catastrophic. Okay. Understood. So I just want to
catastrophic.
make sure
Yep,
I understood.
a catastrophic event. We call it a cat event.
Okay. That's
Yeah.
fascinating. Yeah. So I thank you for enlightening us on this, right? And we just saw that policy. So let's go back to what was the total there. And every area is going to be a little bit different. Oh, and I was pulling up more than 335,000 claims have been filed in the aftermath of Hurricane Ian so far. This was from 2 days ago. So there's thousands more on top of that already, most likely, right? Which is an estimated $2.8 billion in insurance losses, according to the reported Florida office. I just want to kind of give you guys some highlights on this. When we talk about this was on Wednesday. So here we are on Saturday, a few days later. Ashley, like, what do we do as a homeowner? So like, let's talk about like the gloom and doom stuff it just is what it is. There's nothing we can do to control, and headlines are always going to make things way worse, right? Like, I'm not uninsurable. I live less than a mile from the beach. I'm very close, right? We're very fortunate. I shared this with you guys last week when we went through this. I live in Pinellas County, right by the Gulf beaches. I'm just over the bridge at Indian Rocks Beach Bridge here, but I'm not even in an evacuation zone, which is very unique. Right. So I'm not in a flood zone, not an evacuation zone. I'm in a prime location ish for being so close to the water. That's probably the best way I can put that. Right. And all these insurance carriers, they have risk factors and formulas and algorithms they do build these things out. But like, what is a good approach? Like, let's just say, let's try to categorize this, Ashley. Like, let's say that you're a first time home buyer, right? What's a great way to approach that purchase? Let's say you're a step up buyer. Let's say that you were living in, a suburb of Tampa. Now you want to move closer to the Gulf because it's time, right? Or let's say that you're a retiree and now you get to make that move and buy the condo on the water. And you don't have to answer all these in one shot, but I'm just trying to give some perspective. Like, what are good approaches for people to what are the things they should be looking for, as a consumer that are going to have serious effects on their insurance, not minimal, right? Like serious effects on their insurance. I think that's a good place to start when we talk about how to approach this, and then we can get a little bit more granular.
Okay. So I think the first thing is we use something called insurance scoring. It's kind of like a credit score, but it looks at your what claims underwriting. So if you've ever filed a homeowner's claim, a lot of times if it's an act of God, it's a hurricane, hail, wind, those types of things, those can be forgiven because you can't control those. But if you have 2 homes in the last 5-10 years and you filed 2 claims or a claim on each one of those homes, it's going to affect your insurance score. So you become higher risk with a new insurance policy. And a lot of times, if you have filed 2 claims in the last 36 months or 5 years, then the private market insurance, their underwriting question is, have you? And if you have, we don't want you. So now you're limited on where you can go. So filing claims, use your insurance. They're there to bring you back to pre-loss condition. So use them in the event that you have a significant loss. Otherwise, maintain your home for the most, what you can. Maintaining your roof is a big thing. If you can keep it maintained, jump on your roof. Roofing companies are great for that type of stuff, to have them come out and certify your roof, make sure it's in good condition. So I think the insurance scoring is one thing. Just try to minimize the claims that you're filing. Know that your insurance company is there, and they will step up and they will pay your claim. They don't want to fight you, but they also can't pay everybody's claims. These small claims. And then roofs. Roofs are a big thing right now. So in Florida, we have the wind mitigation. I think the best way, if you're going to be buying a house, is check the age of the roof. And it could be a 30-year shingle, but because of the litigation that we have from the public adjusters and the attorneys, and again, not all public adjusters and attorneys. I have a lot of friends who are attorneys and public adjusters, but there are some that feed off of this, and they make a lot of money. They line their pockets, where you're getting your roof replacement and they're lining their pockets. So that has closed that gap between how 30-year shingle and how the life expectancy of that roof, according to the insurance company. The closer you get to 20 years, the insurance company doesn't want to take on that risk anymore, because all it takes is a roofing company to knock on your door and say, hey, well, you've got some excessive granule loss. Why don't we file a claim and sign this AOB over, and we'll take care of it for you. So those insurance companies don't want to take on that risk. And you're going to pay more as the roof is older, because they're expecting these claims until we have tort reform in the state of Florida. That's going to continue to happen. When it comes to, so I think between buying and selling, for a real estate perspective, when you're representing the seller, it's probably a good idea to talk to them about the age and the condition of the roof, and know that it's a possibility that you might have to, seller concessions, maybe put a new roof on. I hate to say that, but we are going back to seller concessions, and the insurance market is very hard right now. It's expensive. If you're representing a buyer, if it's a 17-year-old roof, and let's say we have an inspection, we have a 4-point inspection, and it shows that there's 3 years left remaining useful life, and I can write you an insurance policy. But in a year, the insurance is going to non-renew you, and they're going to make us recertify the roof to make sure that you have, additional remaining useful life on that roof. Yep. So now that buyer who, is in their dream home is forced to, come out of pocket $20,000 to replace their roof, and they didn't know that going into the purchase of the home. So I think education is huge with that.
That's spot on. And you and I dealt with this scenario specifically. This is one of the things that Ashley helped with, but that market was different than today, to her point, right? So I think this is great. We're in a market right now where we're seeing 7.5 percent interest rates, which is insane, right? And then as a buyer, you're taking a look at this. And I want you to look at this from a homeowner's perspective if you are one, right? And then also, someone who's looking at purchasing a home. This is, I want to talk about this scenario you painted specifically, Ashley, because we're looking at most people, and this is where I want to take a step back. Most people they do not purchase their homes on price. If you're buying a house in cash, that's when you're focused on the price. Most everyone else who buys a home is focused on their monthly obligation, right? They buy based upon what they can afford. This is what I either want to spend or I can spend. Hopefully it's what you want to spend, that number, right? And then we go to work trying to find that thing for you. If the insurance premiums are going to be double, right? And I want to give an example here of the scenario you're painting. Let's say that the roof is at its life expectancy. No insurance company wants to touch it, but she can go to the excess and surplus. As soon as you hear excess, you're in trouble, right? So all I heard was that's the private money lender. Buckle up, right? So, you go to the excess market and someone's willing to underwrite your policy. Let's say on the average home in Tampa Bay area for $4,500 a year. Right. Just giving that example. Well,
it's not common.
Right. And if you have a brand new roof, and I'm not making insurance quotes here, I'm just giving an example. Right. So but if you have a brand new roof and you happen to have hurricane windows and doors, maybe the insurance policy is only $2,500 a year. That's a $2,000 difference, right? Annually. Okay. Break that out over a year. How much does that lower your payment every month? So this is a thing that I want you to think of as a homeowner, as a home buyer, as another way to offer an incentive to a buyer, or as a buyer looking at it as a homeowner. How do I get my payment down? Okay. Well, I can actually get my payment reduced by getting a new roof on the house. And negotiating that upfront, like you said, Ashley, that's a strategy that you can deploy for that. And we're not even talking about interest rate buy downs too, which can get you to a reasonable rate. So I just wanted to stop a second and look at that, because not only is getting a roof it's a value to you as a homeowner in general, because it's less capital expenditure over time. Your maintenance goes down, right? Your maintenance costs. But what it really also is a strategy for lowering your monthly expenses in terms of payments if you're making a payment. So I think that's a wonderful illustration that you brought up there. And I want to thank you for that. I want to get to this. We got a couple questions, Ashley, if you don't mind, then I want to let you wind back up again, because you're spurring people's questions and I don't want to go too far past when they ask them. Ronnie asked, in your opinion, should Florida government get involved with insurance problems or leave it to the market to sort out? That seems like a loaded question. Yeah, I'd love to hear this answer.
I think we need the government. However, we have a couple attempts already to, but they're not really addressing the problems so much. So to keep it up to the insurance carriers, at some point we're going to see that the roofs are not insured at replacement cost anymore. They're going to be insured at actual cash value, which means the older the roof gets, you're going to be, if you file a claim on a 20-year-old roof, the insurance company is not cutting you a check to just replace your roof. They're going to cut you a check for, the age, wear and tear, the depreciated value of that roof. That helps the insurance company. There are a lot of insurance companies right now, since we haven't had what we needed for tort reform or with legislation in the state of Florida, we haven't seen enough change yet in the right direction. So you'll see insurance companies stop writing new business, but then offer a new product that they are writing in this zip code. They are going to write older homes or older roofs. They're just going to insure it at actual cash value versus replacement cost, those types of things. So I think insurance companies are already trying to do that, knowing that we're just not getting the support that we need, from legislation.
No, that makes sense. That's a great question, Ronnie. Thank you for asking that. Guys, if you have questions, keep them coming, because I'm sure there's a lot, most of the time. Go ahead.
I'll tell you, when people are buying homes, they're looking at their monthly expenses, and people don't they don't want to pay a lot in taxes. Obviously, they don't want to pay a lot for insurance. Nobody likes insurance until you need it.
Yeah.
So, it's important as an insurance broker for myself, for me to give you those options and talk to you about what's covered and what's not covered. I can quote you a really good policy, but I can save you a few $100s by removing some of those coverages. And a lot of times we're having to do that. We're having to do that for DTI issues. We're having to do that because people just can't, they would prefer to self-insure. We're just, a lot of exclusions in the insurance policies these days just to be able to get people to closings. And they should be aware of what's on their policy and what's not, and what is no longer covered because we've opted to exclude those from the policy.
Yep. And that's why you need a very good insurance broker, y'all. So I'm making the case. I brought Ashley on here today. I'm going to link her contact information in the description in entirety. So you'll have access to her, all the ways that she wants you to reach out. Also, we'll put that in the banner here as well. So you'll have that contact information, but I just wanted to, make sure that you guys know you have direct access to her. So if you have those insurance questions and you live in Florida, reach out to Ashley. She can definitely help you in that direction. We got another question here, Ashley, I think was great. So for those who file a claim, are their policies going to be unaffordable afterwards? Yeah. So I think she covered that a little bit, but go ahead and get into the specifics if you don't mind.
I wouldn't say that, one claim, if you have a catastrophic event, if you do have a roof claim, usually the cause of loss is wind, hail, hurricane. That's considered an act of God. In one of those is forgivable. One claim is not bad. But multiple claims, yes, it's really going to start affecting you. How much the insurance company had to pay out on a water loss in your home. New insurance company probably looks at that and says, well, now there's extensive damage that was fixed, but are you at higher risk for now a mold claim in the future? Like there's every insurance company has their own underwriting guidelines, their underwriting questions that we have to look at and answer. And some insurance companies don't want any claims and other ones are fine with it as long as it's only one. So I don't want to say that you'll have unaffordable insurance, but sometimes with certain insurance carriers, they do have a surcharge for that. But it is what it is. So it makes it difficult, but
less is always more when it comes to insurance, right? Meaning like the less I got to talk to the actual insurer, the better it's probably going to be for me and my premiums in the long run.
Yeah. I really just think, call your insurance company. That should be your first phone call. Don't call anybody else. And I think homeowners don't actually know that. I get phone calls from people and they're like, yeah, well, I had an adjuster come by and they've already looked at all the damage and they think it's worth this. And it's like a public adjuster came by your house. Like you have a contract with your insurance company for them to come out to protect and rebuild your home. Like that's why they're there. That's why you pay them a premium. They are there to bring you back to pre-loss condition. And unfortunately, that step is being skipped. And as soon as we skip that step and we go straight to a public adjuster, that claim is inflated. And that's where it's going to hurt someone who files a claim. If you have a water loss or you have a $10,000 payout because you've called your insurance company, then you're probably going to be okay. But that same claim could be $30,000 because you hired a public adjuster versus calling your insurance company first. That's going to hurt you. Yep. So those are just things I always just please stress to people is call your insurance company. That's why they're there. They send you a policy every year with your coverages. Let the adjuster come out. There are ways to dispute. People think you have to immediately hire an attorney. Not the case. Every insurance policy, if you dispute the loss, if you think that the claim amount should be more, then there's alternative dispute options. You can have an appraiser come out and look at the loss, and the insurance company can have an appraiser, and then the two of them get together and they either agree or they don't, and then it goes to an umpire, and from there you can, everybody's going to be happy. But the minute you file a lawsuit against your insurance company, you're going to be hard pressed to get insurance in the future for sure. So that's just something I try to really stress with people.
It's like suing your spouse. It doesn't make sense.
Yeah,
And
exactly. Yeah.
listen, I'm not, I know that this may sound like I'm leaning towards in favor of I'm not, y'all. Like, trust me, I'm not a fan. It makes me nuts that I have to do it, but I recognize the value in a catastrophic event. And that is what they're there
Correct.
for. Like for me, like I said, this is Juan speaking out loud, right? And just from a professional perspective as well, like those guys are there to be the backstop ultimately, right? As a homeowner, right? I have to look at this asset as it is mine solely and no one else is responsible for it, right? Like I should be putting money aside. Now, I say these things. I know people go through peaks and valleys. I've been broke more than once in my life. I understand the challenges that come when you get into a phase where things aren't working perfectly. But when you are able to get yourself in a position where you're getting ahead, think like a owner would think, right? Like, do you have a capital expenditure account, a savings account for your home, right? That you're setting aside 2, 5, 10% each year, whatever that number is, to go towards any potential things and the things you're going to have to pay for every year that roof is on your house is expiring. Right. And if you put a roof on today, okay, cool. I'm in Florida. I bought 30-year shingles. Realistically, I'm probably going to get 20. Right. So now I need to start budgeting for that 20 years down the road. And I know this is not sexy talk, but that's not the point of today's conversation. It's to help educate and empower us as homeowners, right? Us as Floridians, us as potential homeowners, and how to approach this. So the last thing that I wanted to get to in here, Ashley, is like, what are some of the things that homeowners can do to lower that cost, right? So like we're aware of like a new roof is obviously going to be a lot less risk for the insurer, but what are the things that can actually benefit me at the things that I use? Like one of the things I always point to is a home security system, right? Like that's helps give me security, a peace of mind, right? That if someone does break into my home, or heaven forbid, I leave the door unlocked or whatever it is, that is going to notify either me or the police department or the fire department that something is wrong with my house. For me, that's a personal benefit, right? Like it gives me a lot of security. What are the types of things that people can do to mitigate that insurance risk and lower those premiums for themselves and make their house better?
Right. So, yes, the fire and the burglar alarms, as long as it's centrally monitored, like ADT or one of those companies, they provide the most savings on your insurance policy. And we just require that a certification from the centrally monitored company that that they are actively monitoring it, and it can be a couple $100 savings. One big thing is, and this isn't in every state, but in Florida, we have wind mitigation credits. That is how your roof is constructed to the home. So your roof to wall attachment, your roof decking attachment, how big the nails are in the roof. Are they 6 inches apart? Are they 12 inches apart? Is the home do they have hurricane clips to keep the roof on the home to withstand a higher wind speed? All of those things apply pretty significant credits to an insurance policy. So when I hate to quote any home that was built prior to 2002 where we do not have a wind mitigation inspection. That is the one thing that can really help significantly reduce the premium. And then the other thing is, let's say the home only has toenails instead of hurricane clips or single straps. There are companies out there that do retrofitting. So you can hire them to come out, get into the attic and put in hurricane clips and save you sometimes upwards near $1,000 a year. It might cost you $800 to have it done, but it's $1,000 savings every year, every subsequent year. So anytime that I look at that where I have a home that, we have the wind mitigation and those credits are not already on that policy, I always refer somebody out and say, listen, let them come out. They'll do a free estimate. They'll tell you how much it's going to cost. I'm going to quote you with that savings and tell you what the savings is going to be. You can make the call if you want to do that. But in Florida, that's pretty significant.
That's an awesome savings. What about hurricane windows and doors?
Okay, so with hurricane windows, yes and no. That is those types of hurricane protection an inspector really needs to come out. They have to look at every single opening. If you have a skylight that does not have that hurricane protection, you don't get the credit on the wind mitigation.
The whole thing.
The whole thing.
Oh,
Because at
wow.
that point, now there's a void there. There's an opening to have a wind or a debris created opening, which is a covered cause of loss. And if it doesn't come through the front window because the front window has hurricane protection on it, but that skylight or that other window on the other side of the house doesn't, you're still at risk just as much as you were if you didn't have it at all. So if you're going to do that, hiring a company that will make sure that every opening has hurricane protection.
That's fascinating little nugget, y'all. I don't know if you caught that, but make sure that you take note of that, because that's super important. So every single opening, that's great. Another thing I wanted to ask you on that point, Ashley, and this is because we learned when we came down, right? We're ignorant Northerners and had no idea that when we were getting the insurance for the house, we had to have separate flood insurance to cover water coming in from the ground level. And I was like, wait a minute. So if we're in a hurricane and a hurricane kicks the front door open and water rushes in the house, you're telling me that that's not insured? I have to get a separate policy? And she was like, that's how it works. She's like, if it comes in through a window, just like you were saying, or the roof gets torn off and water comes in, well, that's the hurricane specifically. But if the water rises and comes into the home and creates damage, that's flood, not hurricane. And I was like, in my mind, I couldn't understand that they were different, but they are. So I would love for you to speak just a little bit specifics regarding flood insurance. Are they always separate? Was that a specific case for me? Again, pretending that I'm completely ignorant, because I am, and I don't write insurance policies. Like, how do we best understand that?
They're pretty much always separate. Flood insurance and your homeowner's hazard insurance are different. They're covering different perils. Different peril is your cause of loss. If it's your hazard policy, your homeowner's insurance policy, there has to be a created opening, that peril that is covered. So if there's wind damage and now there's water inside the home because there's been a wind created peril, or a peril created opening, I should say, then that would be under your hazard insurance policy. But rising tidal water or storm surge, that type of flood is not on a standard homeowner's insurance policy. And so if you have a mortgage and your home is in a moderate or high risk flood zone, every home in the country, by the way, it is in a flood zone. So when someone asks, is your home in a flood zone? All homes are in a flood zone. It's just a matter of, are you low, moderate, or high risk? Yeah. If it's a low risk flood zone, the mortgage is not going to require you to carry flood insurance, but that also means that you're at low risk. So the insurance companies that offer flood policies can be really inexpensive, like a few $100s a year to write a flood policy for you, because you're in a low risk area. The higher risk areas are going to require, the mortgage, if there is a mortgage, they're going to require you to carry that flood insurance. So it's unfortunate. We're going to see a lot of that right now, because a lot of people that were in the low risk flood area, they don't know that that's not in their policy. I will tell you that every application that we send out, we talk to them about flood insurance, and we can talk them into it, but people are trying to save money. Yeah. They're taking things off their policies and removing coverages and endorsements and increasing deductibles just to be able to bring the premiums down. So, trying to talk to people about buying flood insurance policies, it's not that often that you get people that want to do that. Not thinking about something like Hurricane Ian, what people are going to be experiencing right now. Yep. But I would always recommend a flood insurance policy. Obviously, I'm an insurance agent. I would always recommend it. It's required by your mortgage if you're in a moderate or high risk. If you're in a low risk, it's a couple $100s a year. You can write a $250,000 flood insurance policy for $300 and for the year. And what is that? That's $25 a month. So those types of things are worth it.
Yeah, 1/1000th of the cost. It does make sense, right? In terms of that, we all want to save money, but I'm telling you right now, if you've ever had your house flooded, it's not fun. It's not pretty. It's a terrible experience. And then if you're fighting with your insurance company because you cheaped out of $200 or $300,
Yeah.
it is going to be a
I
very tough conversation with your spouse, right? Like,
I
what in the
yeah.
world happened? Yep.
I try to tell people, they say, "Well, do I need, do I need flood insurance? Am I in a flood zone?" It's like, well, all homes, if it rains where you're at, you should probably have flood insurance.
That's a great point. Well, we have another question here, and then we're going to start wrapping this up, y'all. I need to get Ashley back to her Saturday. She carved time out for us, and for you guys specifically. And on that note, I've got her URL listed down below. It's brightwayburbankboyles.com. You can see it down there. We're going to put all of her contact information in the description following the live when we wrap up here. If you guys have any questions about Florida insurance, please feel free to reach out to Ashley and her team. They are wonderful to work with. I can get clients on here to tell you that, right? And I receive nothing in return. I don't get a discount on my insurance policies. I don't have one from her yet, but just walking you guys through that. So, I just wanted to bring somebody in here who I know not only understands her industry, the challenges that her clients face, but also is very good at helping you understand, what it is that's important to your policy and how to approach that. And that's the reason why I wanted to bring her on, because she's a true expert. Ronnie had one more question here. He said, would you say condo or house insurance is more risky endeavor to undertake when considering buying a property? Condo versus house. Got it. Okay.
Condo versus house.
Yeah.
So they're two totally different policy forms. The condo, you are insuring the drywall in, you're insuring the paint and the floors and fixtures and those types of things. And then the condo association has their master condo association policy, so that is going to cover the actual dwelling itself. I don't really know which one would be more risky, but they both cover different things. If you have damage into your condo from a neighboring unit, something like that would be covered on a policy.
Well, and to that specifically, Ashley, like the thing that Ronnie, that you're going to have to take a look at, does your condo association currently have reserves? Or have they opted out? Because this is a great question, but it's multi-layered, right? The condo association will have its own insurance for the exterior of the property and the grounds themselves. The homeowner will be insuring, like Ashley said, from the drywall in. All right, so that's another form of insurance. But each homeowners association, they're able to vote on whether they have reserves in a specific year or don't have reserves. So think about it again. If their insurance policy only covers value and not the entire replacement cost, and they don't have reserves in there, now what do you do as an owner? You're left hung with that. And if they're going to have to go out and borrow money from a bank to cover the reserves, they're going to hit you with a special assessment. So that's a very deep question.
Yeah.
It has multiple layers there, but it's great. It's a great question, Ronnie. And
I guess with homeowners insurance, you own the entire dwelling. You can really pick and choose what type of insurance you want and how you want to be indemnified in the event of a loss. With the condo, if a claim doesn't get paid, you probably have to subrogate with the condo association, which that doesn't look pretty most times either. So.
Nope. Yeah, I got a client who purchased a condo this year, and they had to have new hand railing put on only their building. And the way that the previous management company structured it, they just attached the repayment to that unit, and it was not spread across the board. So they added an additional $600 every month to that unit, that building. I'm sorry. So the 4 units in that building for a 5-year period when no one else in the entire association had to take care of it. I'm like, what in the world? How does someone do that? But these crazy things happen, y'all. That's why, like, condos, HOAs in general are like, remember, they are a governing body. And if you're not involved in there, those people get to vote and operate any way they want. So that's a great question. I don't think Ashley can entirely answer it, but she can give you some insights on there. be mindful when you're stepping into condos. Some associations are wonderful. They are completely overfunded. They have the ability to take care of anything at a drop of a hat. Others are entirely underfunded, and they are just one disaster away from you living basically in squalor, right? So that's the best way I can answer that. Ashley, I've had you on here for 55 minutes, but I think this has actually been wonderful. There are so many more questions that we could ask that I'm sure this young lady could break 6 ways from Sunday and explain them all out to us. But what I want to do is give people a way that they can connect with you directly. Obviously, we are seeing, her comment down below, asking the name of your company, if you don't mind, and how do you want people to get hold of you with your insurance questions in the state of Florida here?
So, I mean, you can call our office. I will tell you the phones ring constantly. So, reaching out to that URL that you see at the bottom, brightwayburbankboyles.com. I know it's nice and long. That will take you to my business page for you to do, just put in your information. If you have any questions or anything, you can type in those questions. It's going to come to me in the form of an email. I can typically multitask while I'm on the phone and answer those questions or get back in touch with you. And then, just understanding that the market is insane right now. It's very busy, and we want to help everybody. And as long as everybody's patient, we will absolutely get it done. Just like you're being canceled by UPC. There are a lot more of those to come. So, and I would say also when someone is getting canceled or you have that, you know it's coming, is start looking now. Start looking for a replacement policy as soon as possible, because those homes are going to require new inspections, and sometimes they're not going to pass inspections for new policies. So then you're going to have to give yourself some time to get all of that done. So the sooner you know that you're having issues with your insurance carrier, just reach out and let us get started to get the ball rolling for you.
That's awesome. Well, Ashley, thank you so much for your time today. And guys, thank you for your time. Thank you for your questions. Again, if you have more questions, please feel free to put those in the comments down below. I will make it a point to pass them along to Ashley. Give me some time. If there's an abundance of questions, I will package them up for her. And if it becomes overwhelming, we'll bring her back on and let her approach this again, because I think that this is a conversation that is worth revisiting annually, right? Just like, you're constantly shopping for auto insurance. It should be a conversation constantly. That's why I'm a huge fan of brokers as opposed to just an individual agency. Nothing wrong with them either. I just want to make sure that I'm being transparent here. Mm-hmm. But I love knowing that the person that I'm speaking to is more interested in their business relationship they have with their client than the agency that they work for, right? Because if the only tool you got is a hammer, you're only looking to pound nails, right? And the thing I love about a great broker is they're taking the client and taking you around to different insurers, specifically saying, I've got a client here that I think is a really good fit for you. What do you think about this? No, that's not quite for us. Then she can take you to somewhere else that does make more sense. And it's a little bit more a la carte. And again, I don't sell insurance, but in terms of like the approach with the client, it's not a one size fits all. And the thing that I've learned being in the real estate industry for 10 years is a lot of these insurance agencies, they have their ideal client, right? Their ideal avatar. And while one company might be really good for seniors, right, that have no history of damage on their home or auto, another company might really want to focus on young homeowners, and they have different products based upon those needs. Remember, insurance is a financial product at the end of the day, right? So when you approach these things, try to make a relationship with someone who can take you and present you in front of multiple providers as opposed to just one, right? Again, not against those, but understanding that there is value in that relationship, because Ashley is focused on her clients, not necessarily the insurer. And to me, that's the kind of relationship that I love. Right. Right.
Yeah.
So, that's my pitch for individual insurance brokers and obviously real estate professionals as well. And as you guys know, if you have any questions regarding buying, selling, or investing in the area, my team here at the True Living Group has got your back. If you've got any questions for Ashley, please feel free to connect with her via her contact information. Our contact information is listed down below. We just want to make sure that we give you guys all the value we can humanly possible deliver. If you've gotten any value from today, please feel free to hit that subscribe button, click that little bell. Ashley, do you have a YouTube channel?
I do not. No, this was my first time doing it live. So
Right. What about Instagram?
I do not.
Okay. All right. Never mind.
I do
Go
not,
to
yeah.
Ashley's website. We'll work on helping her with
I do have a Facebook page. It's Brightway Insurance, the Ashley Burbank-Boyles agency, and I do try to use that page because updates in the insurance industry, all of that good stuff. I try to post it on there and I try to get people to share it. And I do get that quite a bit. I think that's how you and I probably at some point connected too. Yeah. Just so that homeowners, I do a lot with real estate agents and lenders, and I just want everybody to kind of know what's going on in the insurance industry because it's changing. It's very fluid.
All the time.
So we just, yeah.
Absolutely. Well, thanks again for your time, Ashley. We appreciate you. And guys, thank you so much for your time today. Share this with somebody. If you know somebody who's considering moving to Florida, obviously we're here in Tampa, but Ashley sells insurance in the state. She can give you great direction on how to approach things here. Share this with somebody you know who's considering moving, or a homeowner here who just needs more and better information about how to approach their homeowner's policy. Ashley, thank you so much. You guys go out, enjoy the Tampa life. Have a great Saturday. Go Blue.
Thank you.
See y'all.